So we just want to take a look at the 15 minutes because that is the important chart now to see if we are going to be getting any deeper levels into that correction. Would mean that we don't really have to buy at 154.10 and 154.3 and these kind of levels. We can buy at much lower levels and make use of the move. So it does look like we're going to be getting shorter. We're getting deeper correction because this is really what we are seeing. You're getting bounces at 5-minute chart at 0 line, not really. So we know that sterling is very weak, still very weak against the dollar. It's very weak generally. So it's possible you're just seeing an A and a B and we're going to get a C. Unless we get degree 3 momentum on the 50 minutes, the trade is not really a go yet. Okay, we can still get that wave B down into another, this wave B, this is what we're talking about. Can still do another swing down, and we would really want to get at the lowest level possible. So that's A, B, and the C. This is leg 1, or A, B, C. That was leg 1, 1, 2, 3. This is leg 2. This is doing an A, B, and the C. So we have 2 projections for that C, and we have that projection too. And I believe these are enough. Okay, so it's probably gonna either this is a double top and it's still gonna break down. Either this flat is going to grow down, or this very smaller flat that is a fraction of the larger flat is going to grow down. We would take a joint target level of both flats as accurate as possible. Okay, so the largest flat takes you to 153.6 and 153.4. The smaller flat does 200% at 153.55, 216 to 261.8 at 153.2, and then it's 152 altogether. So that's 153.2 is really the market bottom, so we don't really believe we get that far. But 153.6 and 153.55 are feasible entries. 153.7, 153.6 are probably what we're going to be seeing. There's going to be a correction down to these levels, so we could consider to buy 153.6, 153.7 with a stop at 152.7 and a target at 155.4. This would be wave B that we are looking at in that chart. It's probably going to unfold within the coming 48 hours, today and weekend tomorrow, Friday. And then we would expect to project, of course, the ultimate depth or the ultimate projection for that wave 4B, sell into it at 155.7 and 155.4. Could even go higher because this is a B and does not have to adhere to, it would just be contained by any of the internal cycles. So we're looking at that cycle 1 here, that dotted green line. So you can actually get 156.4. It would still be a wave B. You're looking at A, B, and that C can take you all the way to 156.4. We will wait for breakout and then make the relevant projections, and then we know where to short. We're looking at shorts anyway because of the momentum plot on the 4 hours, that this is not a market reversal altogether. The reversal is quite important because it comes at the lower boundary of the reading of the ending diagonal that we have on the daily and the weekly. This is the lower boundary of that ending diagonal. We're having a reverted head and shoulders. We're gonna try break higher, but we expect in reality that you're just doing another shoulder. This is from the 4 hour chart. That is the lower boundary of that ending diagonal. We are inside of an Elliott structure down on degree 3 negative momentum, so there will be another degree 5. You're seeing heads and shoulders at the lower boundary of that ending diagonal in the first place. This is the lower boundary of that ending diagonal that you get to see here on the daily chart. So going all the way to 155.70 is really a shoulder. You're seeing, of course, multiple heads and shoulders. It's a sell like we're showing here, right? If you get to see it. And also it is, of course, it is the same dilemma here on the daily. Would want to check momentum, and on the weekly, but it is the same technical picture. 155.79 is also a shoulder. Let's take a look at the higher degree momentums now. Alright, so the bounce you can see is here on the daily, and we have zero line bounce. Could be a B like we're looking at, could be that is it, you know, everything can change quickly, so we have to be prepared. We know the longer term technical picture that this is going to 160, but the conditions are not really right so far, so we don't really, we expect of course rejection. This is that green level 1 where we expect rejection, just that point. 156.8, bit even high, you could get rejection at 156 and 155.4. you have these levels here. You can get either rejection here, or we have to be prepared, not knowing really, no one can tell the future, so anything could just change. And the bounce could be valid at that cycle top or that cycle top. We are of course at a moving average on the daily chart, so if the bounce is valid, we will go very high, or we could see a break of that top. So we have to reverse into longs and monitor the momentum on the 1 hour to see if it does break out into a degree 3, so that would mean that we're going to 156 levels and these kind of levels. So we're just waiting for that reversal on the sterling dollar pair for this to start moving higher. We'd also want to check the chart of the week. The weekly momentum is what we're showing right here. So right, we all can see what we're seeing. The important thing about this chart is the momentum plot. We were trading a rejection at overbought levels. If there's a correction below, or sorry, above this bounce here, this is very meaningful. If you get a rejection, if you get a bounce now on the 1 hour chart, maybe feeding into the 4 hour, when momentum on the weekly has not fallen below that trough or that bottom, it would mean that this could become an inverted head and shoulders on that frame, because the feed on the daily momentum, and we just show a zero line bounce on daily momentum, and the feed on the weekly momentum is valid, is strong. You're seeing inverted heads, that is that shoulder. We have now a higher right shoulder, so we will reverse into longs. Now, why can this happen? Fundamentally, all equity markets are bearish, and there is a stronger dollar, and there's interest rates coming in. If you're going to be buying equities, you have either to buy them on very little leverage, or you really have to be actually sure that what you're buying is going to be making you good profits. And there is actually depression in equity markets right now because of the Omicron variant. So how can this make sense fundamentally? Yes, it can, if there are some fundamental institutions or some hedge managers who consider that there are bargain prices in stocks at these levels, who would want to go into the market, into the European market or into the Asian markets and buy. We just saw today that actually Asian stock markets had a bearish day this morning. Somehow it is looked at that this is a buy opportunity, that prices are at a bargain level and you would want to invest in them. So at least this is what's showing on the current momentum plot for sterling against the yen.